Vincenzo's Gold Crypto Investing this October the 30th, 2025, Halloween Eve, on a breezy, seasonably cool 56 degrees, Jay, from just north of downtown Detroit. Inside the Vincenzo Mobile Compound, as we are one day removed, almost 24 hours away from the Federal Reserve lowering interest rates by a quarter to a half a basis point yesterday, as the markets expected, at almost a 100% clip. And they are going to be ending quantitative tightening, as we've already known for several months. And they will begin quantitative easing, at least in my opinion. And I am forecasting next year, as Jerome Powell is ousted and a new criminal gangster henchman is put in, a shellacking that'll drastically reduce interest rates, buy government bonds, buy treasuries, start that printing press up, and inject fresh liquidity into the markets. You can see the US dollar is up 0.43% to 99.565. Gold is up $18 on the futures, but $67 on the spot price. Silver spot price is up 2.6%. Futures is up 1.5%. And the mining sector is having uh, a so-so recovery. And they had a big hit last week. The last week and a half, they went down 10 to 20% across the board from their most recent highs. The Bitcoin price is down 2%, and everybody thought it would be going up yesterday on the rate cut. And gold and silver steadied off and did that after it's been down for the last about 8 trading days. It did turn up because rate cuts, which you would expect. But everybody thought Bitcoin would go up in crypto, and you can see Bitcoin fell off a cliff yesterday. Right at the same time the Federal Reserve started to talk, it fell just right off a cliff, right? It's gone right off that cliff. You, me, we were all talking about it yesterday. And early in the afternoon, if you can remember back to just 24 hours ago, we were saying, what if everybody's expecting this bullish price action in the Bitcoin and the crypto market to continue appreciating because they say the cycle's not over. They say it hasn't reached the top yet. They say it must continue to appreciate and go up. But we were theorizing or speculating or questioning or talking about what happens if that doesn't happen this time, because they're predicating a November, December holiday rally that starts usually around October and accumulates into a blow off top around Christmas into the new year, right? What if, and that's only been a recent thing since COVID, since after COVID, 2021, 2022, 2023, 2024. 4 years. That's right. I said 4 years you have, and that everyone's playing this off. What if this time it pulls the rug out and has a much needed cooling off consolidation to the downside, because everybody is ultra bullish and they think it's going to the upside because the last 3 to 4 years have trended that way? What if we come down to 95? What if we come down to, God forbid, 79,000 over the next 3 months, then have the turnaround going into January, February, March, and we start pumping in the next year like I think we're gonna? But what if we have this mid-ground correction that nobody sees coming? How would the market react? How would you react? How would individual swing traders or people that loaded up the bag thinking that brief flush 3 Fridays ago tomorrow, where the Bitcoin was down about 13%, the Ethereum was down nearly 30, and altcoins were down up to 60%, thinking that was a wick swing bottom and that was it, and it was going to pump now, and that just needed to do that to clear out all the leverage to move to the next level. What if the market's smarter than all of us, and the market said, we're going to give them what they think is a shakeout, but what we know is just everybody loading in anything they left had on the side gets dumped in, and then the price comes down to some of these lower levels. So that's what we're watching this weekend. It's back at the 200-day moving average in the daily time frame, and that was an area I said I didn't think it would hold if it got there. And if it doesn't hold and it does what I think, you're coming down here to 95,000, because we've used a lot of buyers off this 200-day moving average there, off the 200-day moving average when we clipped it back here. So I didn't think it would hold, and that's what we were talking about yesterday. I said if this thing at any point comes down back to the 200-day where you're at now, I don't think it would hold. There could be a slight little bounce off of, but I think now the next move is 95,772 until it breaks above these two moving average and takes out that high right here and you're above the 50 and the 100-day moving average, I think I thought and we were talking about yesterday and the last several days, this is not your target because it came all the way back down to the 200-day moving average, and I don't believe it's going to be able to hold it. There will be a nice bounce off the 95,000 at minimum, but then that questions is 79,000 in the immediate short term. Future of this XRP, I got to time check that. All right, we're good. XRP is the same thing. You can see we bounced off the 233, and where we were yesterday, we said uh, if you can't get above the 200-day moving average and the 50 and stay above the 200-day, because we were in our third straight day of being rejected by the 50-day overhead moving average, and you can see that on the wicks right here. We said if it didn't hold that and came down, it would have to hold the 255. If it didn't, it would come straight to the 50-day moving average in the weekly time frame at 233. And the forecast was if it did that, it would not be able to hold because of all these buyers where it stabilized 2 Fridays ago on the 8th, 9th, 10th, and 11th. Or that was the 10th and 11th. And then over the next couple of days through the 16th to 21st, it chipped away all those buyers. So if it came back and retested the 233.50 day moving average in the weekly time frame, I don't believe it'll be able to hold that. And as we were talking about, I believe it's going to come down. I believe it's going to move lower. I believe it's going to come down to the 200-day moving average in the weekly time frame, because that is the next major area of major buyers that'll be at because of the support of a technical major level. But I do not think it's going to be able to hold this if it comes back down due to the buyers being chipped away, due to uh, the limit orders being taken out last time it was there. And I believe the wall has been chipped too much and it'll come down. And the next move, if it comes down to the 233, is to the 100-day moving average in the weekly time frame down there in blue, right? If you want it to not go down there and you want it to turn around and actually have a bullish trajectory, you must get some buyers to come in immediately right into this local slight small supply zone, and then work your way back up over top this 255, and then attack and take out the daily time frame moving averages that are overhead the price, ready to beat you down, right? So that's what we're looking at there. The XLM is the same price, but this one has actually slipped the 50-day moving average in the weekly time frame. And we told you that it would have to come down at bare minimum to the 100-day moving average at 25 cents in the weekly time frame if you couldn't hold that. And you couldn't hold that because the buyers were beaten down. The limit orders and the stacked technical buyers at the level have been taken out, and that the price would have to come down to at least a 100-day moving average. And this is opening the doors, if this does happen, to lower and lower levels, just like we theorized, talked about, and brought up to at least your attention, bell notification for free to not miss any of these, to become an asset millionaire. If you find any of this educational or informational to help you move your way and work your way towards an asset millionaire, $3.99 a month. The help starts at to support the channel. Video description and our pinned comment down below to become a member of Jabroni Killer. Right. Uh, Much appreciated. These videos have been and will continue to be free. That's right, free into the future, into always. But you can help support the channel, help hit that like button to move us through the YouTube sphere, to help get us more and more viewers, to help educate more and more people, right? And that's the whole goal, the whole mission, and the whole objective of this station, is to document my journey and to educate and spread what I have learned to you guys, the audience, and what I am doing and where I think things are going based on the information that I have in my brain that I learn every day. Each and every day, we learn new things. But we were theorizing, as I digressed, back a few weeks ago. This was when we had that big dump on the Friday of the 10th and 11th, whatever that Friday was, about 3 weeks ago tomorrow. That what if that was where everybody thought, because that was a 60% move. Look at this XLM, right? And these were a lot of the altcoins. Some of them were less, some of them were more. But from peak to wick, 60% it went down. And then everyone's thinking that that was getting all the liquidity, 1.8, 1.6, 1.3, whatever it was, million traders were liquidated. We had the most leverage ever taken out of the market, gone, zip, zilch, never to come back, right? And one day, everybody thought at the masses, all the mainstream and the YouTube sphere and the social media hypesters all thought that that was what was needed to get us to new all-time highs because it brought out all the liquidity that was there on the longs. And I was theorizing, no, what if, because everybody's thinking that we really have to come back down and touch these wick lows, then we can go back and make new highs, right? Not saying it's going down there, but I at least brought up the question when nobody else was, uh, on the day as it was actually happening, right? And continued to harp that if we didn't break these key levels, we would have to talk, at least talk about this, right? Something else that I wanted to bring up. We'll look at a summary of what a sovereign debt crisis, because I believe we're going to have a sovereign debt crisis. We already have a crisis. We're already in a sovereign debt that we can't get out of. There, it's just not. People aren't panicking yet because the inflation has been slow enough to where it hasn't caused mass panic, but now we're starting to get to the point where people can't afford anything, and that's why I'm looking at oil. The only thing that hasn't went up, the only thing that is in a depression or depressed, the depression is going down. The only thing going down is gas and oil. I'm looking at oil here and gas at $59, $61 a barrel, and here in the great state of Michigan, 1 gallon of unleaded gasoline is $2.64. Cash, $2.79. Card that I'm looking at right now, right? $2.79, $2.89, $2.79, depending on the three gas stations at the corner. But that's the only thing going down to give some relief because nobody can afford food, housing, electricity. No one can afford anything right now. We're in a debt crisis and we're going to have a big explosion. And I believe 1930s are about to reshape, and we're in 1925, even though it says 2025, and 2030 is going to be like the 1930s, right? Not good. A U.S. sovereign crisis would occur if investors begin to lose confidence in the federal government ability or willingness to manage its debt due to either rapid rising deficits and interest costs, which we already have. We can't repay it. We've lost confidence. Political gridlock leading to debt ceiling standoff or missed payments, which we're in right now, which we're in usually every year. Persistent inflation forcing higher yields or a sustained decline in global demand for U.S. treasuries. We have higher inflation, but it's not forcing higher yields because the U.S. government is still manipulating them. But we're about to come to a crossroads that they're going to try to manipulate them down. But the market, because of the debt, is going to force the interest rates higher. And I think that's what's going to happen here in the coming couple of years. How a main event would, how it might work. Phase one, market warning. Treasury yields rise sharply as investors demand higher returns for holding U.S. debt. The dollar weakens and credit default swap spreads widens. Phase two, liquidity stress. Bond market volatility increases. The Fed may introvert with emerging measures, yield curve controls, quantitative easing, where they go in, like we've been talking about buying U.S. treasuries and buying bonds, right? Equity markets decline and uncertainty spikes. Phase three, confidence shock. If policymakers fail to stabilize confidence, U.S. credit rating could face further downgrades. Safe haven flows split between gold, high quality foreign bonds, and possibly Bitcoin. I don't believe it would go to Bitcoin. It's already going to gold and high quality foreign bonds. Impact on risk assets, Bitcoin and crypto. Short term, Bitcoin and crypto could initially fall with broader risk assets due to liquidity stress. Investors sell everything to raise cash. Medium to long term, once confidence in the dollar and treasuries erode, Bitcoin could benefit as a potential alternative store of value or digital gold, which I don't believe in. I don't believe that you can call it digital gold. Gold is by himself. You can't. A digital gold would be gold on the blockchain, where you physically hold gold coins, but it's backed by physical gold, right? Particularly if policymakers respond in more quantitative easing, which they will. Altcoins, high risk tokens would likely remain volatile and underperform. Bottom line, U.S. I believe though, if sovereign debt crisis happened, the most risky things would crash, and I think a lot of the bitcoins would crash. Why gold would soar and silver would soar, and I believe eventually oil is going to soar. U.S. sovereign crisis would first trigger a global liquidity crunch, which would hurt assets. Bitcoin would sell off dramatically, right? Hard assets like Bitcoin, gold, and commodities as trust in fiat weakens. Uh, I just wanted to bring that up. I gotta let you go. I gotta get back into work. We'll go into some more stuff tonight. Peace and love, the Rock's eyebrow, my beautiful audience. Jay.